All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time on Wednesday. What is this? June 26th. Man, oh man. Next week, 4th of July here in the U.S., folks. So short market week coming up then. We've got Beards and Bitcoin here today. And man, we're going to talk about quite a few things, guys. We're going to hit on whatever we can as far as Morgan Stanley finally going to get those Bitcoin ETFs on board. We've got Mount Gox, of course. Everybody's kind of concerned about that, so we'll talk about that with you guys for a bit, so you understand a little bit more about why you probably don't have to really be worried about that, and a few other things. And so today we just have Mr. Andrew here. Tillman is on a road trip with the family, so we figured instead of him trying to drive and do the show, I didn't want that kind of news coverage coming down on us here. So,
well, listen, you get the beauty instead of the brains today, okay? And that sells. We know that sells. All right,
that's what it is.
It is. It's important. It sells here on this show, so we're going to go all in on it today. All in on.
I noticed you didn't even have the cap on today. You really get here.
No, I'm going all in. I'm letting it all out. It's summertime. Let's show a little skin here on the show and let's get it rolling, baby. All right.
Oh man. So yeah, what a week. And then of course, earlier this week on Monday, we had the drop on Bitcoin there. Mm-hmm. Went back a little bit further than I initially thought it would, but still well within the range we were in. Bounced off the S1 pivot on the daily. It's just above the 200 MA. Everybody's screaming, "Oh my God, it's the end of the world." What do you think, man? End of the world?
No, not the end of the world. It's summertime, in the words of Will Smith, summertime. Time to sit back and unwind, right? So that's right. What's happening with Bitcoin right now. Sit back and unwind. So let me give you the macro picture associated with the current price action of Bitcoin as I see it. Here's the way that I like to describe it. So we Tillman and I, we run our business, Arch Public, and we've had a great week this week, onboarding customers, but we're also cognizant of the fact that Wednesday before the week of July 4th is effectively Friday of this week. And so, the reality is, if you were to go door to door on Wall Street, Morgan Stanley's flagship office is effectively in Times Square. UBS has a massive office on 6th Avenue. Merrill Lynch has offices on, Avenue of Americas, which is 6th Avenue. If you were to go to those offices, there's half of the staff is there, and all of the executives are not there. Yeah. They're gone. It's possible that they were there maybe Monday and Tuesday of this week. Possible, right? Probable, not really, but possible. But absolutely, on the Wednesday before the week of 4th of July, they're gone, man. Yep. They're absolutely gone. Nobody's going to be in office next week. Everybody's gone to their favorite vacation spot that they've been looking forward to for the last 3 to 6 months. And so, even look at current market, action today. Again, to peel the curtain back a little bit, one of our algorithms is in a trade right now. It's our gap strategy, our micro S&P strategy, and that gap strategy looks at yesterday's close and today's open, and is that gap going to close? Right. That's what it plays. When there are periods of normal market volume and price action, that trade closes within 3 minutes to about 35 minutes. It's a very quick trade, in and out, done. The gap closes or it doesn't, and it's finished. It's still in the trade right now, and it's 12 o'clock. We're 3 hours in. Well, why is that? Well, go look at the trade action on the S&P today. It looks like a flat line and somebody that needs to be taken to the morgue, right? And put a little tag on their toe. There's not much going on. Ergo, Bitcoin, even though there's a subsection of Bitcoiners out there that still want to remain cypherpunks, right? Yeah. Still want that to be the ethos of Bitcoin as an asset. Okay, that's fine. You can do that, but understand that the price action is going to act more like a traditional hard asset at this point. That it's going to be more connected to market action than it ever has. And we're seeing that now, right? We
Yeah.
saw a move down on Monday, but fairly quickly we saw a 5% move back up to kind of its, let me hang out and marinate in the hot tub that is for a period of time, and it's going to stay there, and it's not going to have meaningful moves. Again, a reminder: Bitcoin used to have 10, 12, 15% moves in a day, right? It used to do that. That stuff is that's very difficult to do when you have institutional of scale arms around a particular asset. When you have a large portion of quote unquote movement in a particular asset is into a BlackRock or a Bitwise or a Fidelity ETF, right? People are not going into that product and buying and selling inside of 15 minutes or 20 minutes or half of a day, right? Very different when a place like Binance controlled a sizable portion of the Bitcoin float, right? Very, very, very different environment. Very different environment. So when you have a macro type of environment where there's just nobody, there's hardly anybody sitting there, pushing the buttons to buy or sell, that half of the staff is gone, the trading floors are darn near cleared out. You're not going to get meaningful action. And so that's what I expect for the rest of summer. I expect, late August for us to begin to climb a little bit higher. I expect September and October to be fairly robust, which, by the way, completely tracks with the way halvings work. You get a 6-month process where you're either lower or sideways, often lower. And that lower, by the way, after this halving is significantly less than our previous lowers after halvings. So, the upside, if you can manage the emotions of having to sit here and do nothing for 3 months, heaven forbid, you're going to be in a great spot, man. You're going to be in a really, really great spot. 90 days from now, I think we're higher. In 90 days from now, we're going to have a place like Morgan Stanley. And Morgan Stanley is just a proxy for all of the biggest wealth management organizations across the street, right? So when I talk about Morgan Stanley, or when I talk to people at Morgan Stanley, by the way, the guy that I talked to about this particular issue with the tweet that I put out yesterday, early morning, his last name rhymes with Dapperstein, so I'll just leave it at there. So fairly high up in the organization. People should Google that and figure it out. But it is Morgan Stanley is, for all intents and purposes, the biggest wealth management organization here in the United States. So they've got about 17,000 or so advisors here in the United States. UBS, by the way, is the largest global wealth manager, but they only have about 6,000 advisors here in the United States. Merrill Lynch is somewhere in between. They'll claim that they have 20,000, but like half of those are like bank brokers, because Merrill Lynch is just really Merrill Bank of America. They're not really Merrill Lynch anymore. Don't get me started. I could get it on a long screed about how Merrill Lynch sucks, but that's not the time or place for this. but that's my previous life and previous company. Anyways, Morgan Stanley is a proxy for those organizations. Wells Fargo, again, a big organization that has both a wirehouse environment and an independent arm, and collectively another 10,000 advisors. When Morgan Stanley finally greenlights the Bitcoin ETFs as available to include in sales presentations for all clients, right? Right now, Bitcoin ETFs exist in all of those organizations that I have just mentioned, but they only are allowed to be included in portfolios for private wealth clients, so clients that have generally 10 million or more long with the firm, and the client has to bring it up. So it's an unsolicited order. So they're not even allowed to bring it up, even with clients that have $40 million at the firm. They can't make it part of their presentation at this point. So if you think about that, I mean, my goodness, we've got, let's call it 50 billion in assets under management with the Bitcoin ETFs, right? Last week it was like 55 billion, but we've seen a move to the downside. But 50 billion, inside of 6 months, that's crazy. That's the most successful launch of a new category in ETFs ever, with nearly zero involvement from rich people that have their accounts hanging out at UBS, Morgan Stanley, and Merrill Lynch. I mean, literally, no involvement, because it's siloed and constricted inside of those organizations. And there's going to be holdouts too, by the way. Even after Morgan Stanley, UBS, and Merrill cross that bridge, there's still going to be other holdouts in the wealth management. To give you an idea, Rockefeller is basically came to be about 8 years ago. Fleming, who was set to be the next guy at Morgan Stanley, got frustrated, didn't want to hang out at Morgan Stanley much longer as the number 2, left and started Rockefeller Capital. And they haven't approved it at all for clients, right? They've got a huge organization, a few thousand advisors. They haven't approved it. Edward Jones hasn't approved it, not even with their biggest clients, right? LPL still hasn't approved it. LPL's got 20,000 advisors across the country. So there's still significant opportunity for layers of capital to then be available to Bitcoin ETFs over the next 3, 6, and 12 months. And it continues to be my thesis as to why we find ourselves at a higher price by the end of the year. I think we're plus 80K, and then heading into the end of Q2 of next year, so effectively a year from now, I think we're at 150K.
Sorry, I had to get my mic on mute there. I've got the guys, man. They just can't get them to come do the lawn, at the same time every week. So I apologize to anybody listening, and if you do hear them kind of going by here, they're doing that. But I'll try and keep my mic on mute when I'm not talking. But yeah, so I mean, again, but Morgan Stanley kind of, as you said, that's the point, that when they get it and there's like, okay, here you go, guys, you can do this. Well, then at that point, it becomes everybody else for the most part, over that next, 6, 12 months or whatever.
They have to follow suit. Yeah, they have to follow suit. Everything is democratized in that world. So people think Wall Street are like the smartest guys in the room. They're not. Once BlackRock does something, Fidelity does something, it begins to trickle down and everybody plays copycat. So then they're using, that product in some way. And the reason why they're copycat after copycat after copycat is because when you're handling people's money, there's legal and compliance and regulatory ramifications, right? So, compliance departments, take a long look at any new product and say, what's the potential risk here, right? And if you get just 1 or 2 people inside of that department at any organization that says, Bitcoin isn't real, it's going to go to zero, I don't care that Larry Fink thinks otherwise, this is stupid, and we're not going to do this. Well, you've got to overcome that. And that may take months. It may take months to overcome it. It's why it's interesting that, a regional bank like PNC, right? PNC Bank, which is in kind of the Midwest, South, and a little bit of, comes from Pittsburgh. So, you're looking at a little bit of the East Coast too. It's why, when Bitwise announced that PNC was going to approve and offer Bitwise as a Bitcoin ETF on their platform, this was like 3 months ago. That was a huge deal. Huge testament to Bitwise as an organization, and a huge testament to PNC's leadership. They're a bank. They're not even they obviously have a brokerage arm inside of their bank, and that's how they offer these products. But banks, generally speaking, lag from a decision-making and risk standpoint. So, again, the larger point here is very, very slow summer months right now. We're still waiting for larger US-based organizations to make the product available, while at the same time, this is still the most successful launch of a new ETF category in the history of ETFs. So a lot to be excited about and happy about, while at the same time, patience. By the way, we have a saying inside of Arch Public that patience equals performance. We generally speaking, we don't have many algorithms inside of our firm that trade every day or multiple times a day, because now it's just a video game, and you're just hoping that that video game is smart enough to win enough times as opposed to just costing you more quarters. And so patience is equals performance. And so our best algorithms trade, 2 to 5 times a month, because they're looking for the absolute right setup. And same thing here, same thing with Bitcoin in this current environment. Like, patience is performance. Adding to your current position with Bitcoin during these boring, frustrating times is the best course of action, because patience equals performance. If you're able to add to your position when Bitcoin is off its highs, when it's lower, when everybody's kind of annoyed by it, or when everybody hates it, you're miles ahead of everybody else when ultimately Bitcoin goes higher. And what do we know about Bitcoin over the last decade? It always ultimately goes higher. Always. So, patience is performance.
Yeah, that's a great point. And, it's something, that I'm a big proponent of, is this. I tell people some days just aren't a tradable day.
Right.
And that's the way it is, and you should be waiting for your higher confidence trade, the one that is most likely to play out the way you're hoping to do, not just jumping in because there's a chance. Because
Right.
even with proper risk management, if you're jumping it at every chance there is, then eventually it's going to, it's still going to be drawdowns, right? You're still, even with proper risk management, you're still drawing down.
Yeah.
And that's not going to end up very well for you.
Well, think about, proper risk management. So in all of our algorithms, we have, most of our algorithms, we have 2% stop loss protection on every position that's taken. Well, that's great. But like you just said, if we're taking a position every day or multiple times a day, that 2% can add up quickly, right? Let's say you take 3 trades in 3 trades a day inside of 4 days out of 5 in the week, right? That's 6 times 4. That can be a 24% drawdown on your account in 4 days, right? Those numbers add up. So if you're talking about patience, is performance, and say you only have 3 trades, and one of them is down 2%, one of them's up 3%, one of them's down 1%. So you're net zero for the month. We had a conversation with Scott yesterday in the morning, and our gateway product hadn't taken a trade for the month yet. But I said, that's not a bad thing. That's a good thing, because you know what hasn't happened in the gateway strategy this month? You haven't lost any money. None. You made 12+% last month, and you've lost 0 this month. If anything, your cash sitting there in your cash sweep account or whatever has made a half of a BIP or whatever the number is, associated with it, their transition. So, not losing money is a part of winning the game associated with trading. You know this, Chris, right? Like, not taking a trade is a win. Not losing a trade is a win. It's not necessarily how big are your big hits, right? It's risk management associated with patience, so you're not taking a losing trade, right? Those are just as much wins. And for us, that thought process is played out algorithmically, right? We've worked for 4 years to turn those realities and processes and code them into an algorithm that then acts on your behalf in that way.
Yeah. And so, so now, again, we look at that, we go, okay, well, here it is. And then we get what? We get the Mount Gox FUD stuff coming up again, right? I hate to use the word FUD. It's real stuff that's happening. There's really going to get their money back. But I think the real thing is most people haven't paid attention to what it is. I don't think, and so I had this idea that we weren't actually going to see 140,000, 160,000 Bitcoin actually hitting the market. And Alex Thorne, I actually shared his post there. If those that don't know Alex Thorne, you can follow him on X at Intangible Coins.
Yeah.
And he is
Galaxy Digital guy. He's the
head of research over there. Yeah. And he goes in. He's got this great thread, guys. You can follow it there. Either on go to his or you can go to my Twitter there, and you'll see the post if you scroll down to the other day. I think probably like Monday or something. But he has a great post there where he details the same kind of thought process I had. Of course, he's got all the data, a lot more of the data there. And basically, it comes down to a lot of people got out with they took the early release, so they got out with that. They had to take a 10% haircut on that. A lot of this is going to some companies, institutional type holders. We have to consider things like those that their business is buying distressed, whatever it is. And in this case, it would be they were like, hey, I'll give you 10 cents on the dollar just in case. You can get your money now. You're guaranteed to get this. You may not ever see your money. And so there's all this stuff that's sold. And so a lot of those that actually, would even receive it are likely to hold on for longer. They're in a better position to hold on for longer as well with it. And so, again, I don't think, that Mt. Gox really, I think some of retail sold because they were worried about Mt. Gox, but I don't think you have to worry really about the type of flow that you're going to have from those Mt. Gox distributions. We've had miners that have really, we've talked about that before, have really been selling a lot. We're after having, it happens. As they got to get, as Tillman's, spoken about before, they got to pay for all the new mining hardware now because their other stuff's basically obsolete at this point. And so, we've got a lot of that. Germany selling a little bit, but really nothing is happening different post-halving than it's happened any other year that Bitcoin's been around. But again, people have been going sideways for a few months and losing the damn minds, right?
It is miners selling is probably the biggest factor associated with sideways action and some downside action. The action that we saw on Monday, that may just be a little bit of a cascade of either some longs that have been, stopped out or what have you there, something programmatic that moved it down by, an extra 5%, because again, it bounced back up. But the drift lower over a 2.5-3 month period. And again, it's all relative because drift lower from 70 to 60 is like, it's Valhalla for most Bitcoin folks. But that is absolutely a function of miners, selling their Bitcoin based on their current, the economy that they have to deal with. And that economy is our miners no longer matter after the halving. We have to get all new stuff. We've got to generate returns based on our business model because some of them are public companies. Part of that business model is selling some of our treasury Bitcoin holdings to prop up this next cycle and to give us, fresh capital to go out and, buttress our position as, profitable miners. And so again, that Tillman talks about this all the time. I mean, that is absolutely the way that it happens every halving. It has to. Because those miners are no longer valuable. They're just not. They become, something that you can sit drinks on, or some sort of museum piece instantly. And so it's smart to be aware of that. And a lot of that gets lost in the conversation, when you hit all-time highs and when the halving hits and everybody's excited about it. Everybody kind of forgets, oh, wait a minute, the the only people that create new coins have to sell some. And because everything else is just moving from one hand to the other, miners are the only ones that create new Bitcoin. So keeping a sharp eye on what's going on in those organizations and the flow from their quote unquote treasuries is really, really important. It also needs to be noted, by the way, that there's a reason why BlackRock has taken positions in Bitcoin mining companies. That's something to keep an eye on long term. So, is BlackRock potentially buying Bitcoin direct from some of their portfolio companies that are Bitcoin miners? That wouldn't surprise. That wouldn't be a shock. So,
yeah, I think that's a great point as well. I think, geez, and I hate to sound like a broken record here with BlackRock, but man, if BlackRock's doing something, you probably should be paying attention, and don't be focused on what they're doing for the sake of what they're doing. It's the theme we've got in here is, on this show is to look beyond that. What does it really mean? Excuse me. And so, Larry Fink, obviously not an idiot. BlackRock, not a bunch of idiots.
Right.
And so it kind of behooves us to pay attention to the moves they're making. Again, they're doing the real world asset tokenization thing.
Yeah.
They're just kind of going all in, it seems like, on this digital. And I kind of looked at it, I'm like, man, if you're not really thinking there's something here, I think you're kind of missing the boat.
It's a long game for them. Let me comment on Mt. Gox real quickly, because you did bring that up. Yeah, Mt. Gox is an interesting headline because Mt. Gox is kind of like in the crypto space and in the Bitcoin space for the last decade. Mt. Gox is the equivalent of yelling fire in a movie theater, right? Everybody pays attention, everybody's got an opinion, and everybody thinks that they know what's happening, right? It's whoa, okay, everybody immediately pays attention. So you put out a tweet about Mt. Gox, it's going to get extra engagement. If you put out a story about Mt. Gox, it's going to get extra attention. If you put out information and dates and times and dollar amounts and Bitcoin amounts, it's going to get extra attention. But the reality is that the way in this Mt. Gox quote unquote finally sending out their Bitcoin and quote unquote liquidation, that's not what it is. They're handing out very, very small amounts of Bitcoin based on the price back when they went bust.
Yeah.
That's less than a tenth of the price that it is now.
Yeah.
And so if you're somebody that's getting that Bitcoin back, you've been forced to hold it for a decade. So why would you sell it at this point? There'll be people that will. There may be institutions that will. There, who knows what that looks like. But it's significantly less of an event than yelling fire in a movie theater. I mean, it's the equivalent of yelling fire in a movie theater and an old man has forgotten that you can't smoke in the movie theaters anymore, right? And he's lit one up in the back third of the movie theater, and so he's got to be asked to leave, right? Might still get your attention, but overall, it's just really not that big deal. Let's get back to the movie. So that's how I see Mt. Gox. It's not necessarily a meaningful event, over a longer term, time period, or really as it relates to the actual, date and time of the distributions. But again, in the moment, it can be a headline that moves the market a couple percent, as it did. As it did.
Yeah, especially retail again, getting scared by it. Thinking not understanding the whole picture there was going on, just the headline and going, oh my God, right?
Yeah.
So you got a question here. It says, with old miners becoming paperweights, let me see here. With old miners becoming paperweights, do you see a bunch of deals like Coors has secured coming to the dying miners? Me personally, this is miners, I think, are in an exceptional position now compared to any other happening. Because now they have this diversification, and many of them have been starting to do this over the last few years into AI and HPC and whatever. Because again, as the CEO of Marathon said, we, everybody refers to us as Bitcoin miners, but we're big data centers.
Yeah.
And so in answer to your question, I mean, I see a lot more potential for this to happen. We've talked about it here on the show. I've talked about it over the last 2 weeks. I've got a new newsletter out called the Bitcoin Miner Stocks Report, where we've looked at like 14 charts over the last 2 weeks. But we talk about all this and how the miners themselves, their future is actually looking quite bright, because they're not just reliant on Bitcoin mining now. They can get into this higher profit margin AI stuff, and it all depends on the data center itself and energy contracts, because AI has to have a cleaner, basically a cleaner data center.
Mm-hmm.
Bitcoin miners, you can run them in the dirt, basically.
Yeah.
So I mean, for me, I think we're going to see more of that kind of stuff coming, instead of a lot, maybe even some of the minor ones, the really kind of low end ones.
I look at the mining space again. I have a macro mind, and so I look at the mining space in the same way that I look at significant industry shifts and refinement and consolidation over time. So let's go back and look at things, right? So from 1914 to 1929, there was like 3 car companies, and then there was 150, right? So in 1914, like 1 out of every 100 people in the United States actually had a car. By 1929, it was down to like 1 out of every 5. So you had this huge proliferation of usage in that industry. Well, over time, and again, elongated time, because technology takes longer and took longer times to go through cycles back then. You ended up with, instead of 150 car companies, we're now left with a meaningful 7 to 8, because, by the way, Volkswagen owns like half of the cars you can think of. General Motors, Honda, Toyota, Ford, and then a couple of Korean outfits. That's basically it. Mercedes. So we're talking about 7 or 8. So we go from 200 car companies in 1930 down to 7 to 10. Same thing with computer companies, right? So in the 1980s, late 70s, 1980s, mid 80s to late 80s, you had 100 different companies creating computers, computer boards, chips, and the like, right? And then there's a refinement period, and now you have, you've got Apple, Samsung, Dell, and I don't know, a couple others, IBM. I mean, that's basically it. And then the chip makers, you've got Intel, Nvidia, AMD, right? So you go from hundreds, down to 3 to 5 to 10. 10 real players in that particular industry. Same thing that we're seeing and are going to see in the Bitcoin mining space. You're going to have big players, mid-level players, smaller players. Over the next 5 to 10 years, there's going to be consolidation. Some will go out of business. Some will be acquired. Some will grow exponentially, right? And so that will happen in the Bitcoin space, and there's lots of Bitcoin miner space, and there's lots of money to be made based on that process, that refining process and whittling down of scale inside of that process. And there will be evolution, right? So one of those companies or a couple of those companies will figure out how to break the cycle of, we're just creating huge, mining facilities, and we're hammering out hash rate, right? Someone will figure out there's a different way to do this that we'll begin to test, and then there'll be adoption to it. Then adoption will grow, and the next thing you know, instead of huge just hash rate farms, those still exist, but then we have another version of how hash rate is handled and how Bitcoin is created based on smaller types of devices. And that company probably will be a big winner. Again, it's no different than Apple being a personal computer company, and now they're an iPhone company, right? evolution, change, adjustment, shrinkage of an industry before it actually gets really big. It happened with cars. It happened with computers. It will happen again, across the technology space, associated with, Bitcoin and Bitcoin miners. Because the truth of the matter is that this industry will ultimately get bigger than the market cap of gold, and there's going to need to be efficiencies there, right? There's going to need to be efficiencies, and there's going to be a need for leadership in that space, and that leadership is generally provided by who is the best at evolving and who's the best at innovating, and we're going to see that over the next decade.
Yeah, I agree completely. And I think great analogies there. Again, looking at technology, technology just does it, right? I've talked about it before. Technology is deflationary because technology, again, it makes things that were a lot more difficult to do by a lot of people, becomes much more efficient to do, takes less people to do it. And those that can manage that the best grow the best. Now, with that all said, of course, we've got this week coming up. We've got a couple of things happening, which I think people will attribute to price movement at some point. We've got the PCE, which is the Fed's preferred inflation gauge, not CPI. PCE coming out on Friday.
Yeah.
My expectation for that is it's going to come in low. It's going to come in below what expectations are. And, algorithms maybe that trade on news like that. Other people, they're going to see that as a reason to go long. The other thing, of course, is what is it? The 27th tomorrow? Is it?
Yeah, 27th tomorrow. Yeah. Thursday.
Yeah. And again, I said this on Gary's show a little bit earlier, but man, I wouldn't have thought 2 months ago that we would even be thinking about, Bitcoin's even going to be mentioned in the thing, and now we're like, there's a damn good chance it may be. And so my thought about that is, everybody I think is really focused on, is Trump really going to do these things? Or, is Biden really going to do these things? I think, for us as Bitcoiners, as holders, as people who believe in this, I think the bigger thing that we should be saying is, hey, wait a minute. It's being talked about. Trump came up and made it a deal, and now Biden had no choice but to now make it a deal as well, to make it important. And so if we can even get a couple of minutes, a couple of things said at the debate about it, regardless of what's really said, I think that's only positive for the space and for the market itself, driving a lot of interest. Because believe it or not, folks, some people have never heard of Bitcoin. I know it's hard to believe, but there are people out there that have never heard of it. And of those that have heard of it, there's still some out there that still think, it's not that great. They haven't really done any research into it. But all of a sudden, when you've got this big space going on, this big talking in front of, tens of millions of people, national platform.
Yeah.
I think we're the winners on that, guys, if that happens.
Yeah, it's going to be interesting where that goes, and what level of coherence we're going to hear from one candidate or the other on that particular subject, because I'm not expecting either candidate to be remarkably coherent about the realities and the nuance associated with this asset class, Bitcoin in particular, and crypto at large. You may be able to get your heads around Bitcoin as an asset, but then the minute that you start to go down crypto world, it just gets weird, right? And so we'll see how that goes. I do expect it to come up, but at the same time, it's probably better left on the quote unquote political stump speech type of stuff where it's scripted, right? Because there's no way either of these guys and most of their teams have any idea about even a term like hash rate.
Yeah.
Probably have no clue what that means, or maybe haven't even heard about it, right? It's easy to say Bitcoin. It's easy to say crypto. I'll keep Liz Warren away from your Bitcoin. That's an easy.
And that's all that needs to be said, right? If we think about it, right?
Yeah, it is. It is.
We would like them to really know more about it, but let's face it, at the end of the day, For the masses, that's really all it has to be. I'll keep Elizabeth Warren away from your Bitcoin, or I'll make it so Bitcoin miners are the best in the world. We'll mine all the Bitcoin in the US.
So those sound bites are useful, but in a debate setting, and again, here's why I don't think it even goes much further than a 1 or 2 soundbite message at the debate, is because I don't think the debate moderators are going to have any idea, probably less than the actual candidates, who were, again, both of them, 70 plus, the 80s. They're not going to, even the moderators aren't going to have any idea what they're talking about when it comes to Bitcoin crypto. So probably a mention of some sort, but limited in scope and probably next to zero depth associated with it. But again, the fact that it's on the agenda, the fact that it's going to be a vote moving type of issue, that's a huge deal. I shout out to our guy at Masari. Oh man, I forget his name now. His handle is 2-bit idiot, which is hilarious. And he is just, he has Ryan Selkis. Sorry. The effort and the work that he's put in over the last 6 months plus to move candidates, to move the narrative, to really move mountains in this space that haven't been moved up until now. They haven't budged. Just a heroic effort by him. So Ryan Selkis, awesome work, man. Just awesome work to bring the conversation to the fore and put this on the map, and make meaningful contributions to policy. And for example, there were a couple of House races, just last night, that went the way of the more pro-crypto candidate, and the clearly anti-crypto candidate lost. That's a big deal, man.
Huge, yeah. Really, I mean, again, I think it's even bigger just because 2-3 months ago we would have never been like, we wanted it to be an issue, but we're like, that ain't going to be an issue. And now we've got, as a matter of fact, we've got Trump, from what I understand, is supposed to be speaking at the National Bitcoin Conference. So
and RFK Jr. will be there. There'll be some politics and policy folks that are there.
It's crazy.
There's been a smattering of them the last couple of years, but big time this year, and it's going to be in Nashville. I don't know how Nashville's going to handle the Bitcoin conference and Trump showing up at the same time. I spent a lot of time in Nashville, man. I spent a lot of time there. I only live about 2.5 hours from there, and so Nashville's grown, but it's grown so fast it's having a hard time keeping up with the growth. Miami would have been a different story. Miami has done a good job keeping up with the growth, but Nashville is, it's gonna be interesting.
Well, I think Miami's still trying to, dry out their carpets and everything from the flooding they had there just recently. So true. But man, so we're sitting. God, I don't. I hate to kind of continue pushing on it, but I don't know if people that are new to Bitcoin that are coming in now because of all this really understand just how big all this is coming out. And it's all coming out at once, right? I mean, it's the whole political side of it. It's Bitcoin ETF approval in January. But it looks like Ethereum ETF approval next week, which, by the way, absolutely crazy timing. If you're looking at the second, because as you point out so well, Wednesday will be like a normal Friday, which is nobody's going to be there.
Nobody's
off on Thursday, and they're probably going to take Friday off as well, because why the hell are they going to go back to work for a Friday, right?
Exactly right. Yeah, it wouldn't make sense. The second is Tuesday, right? And the fourth is a Thursday. I don't know if it just seems weird to me that if it was the second, it almost feels like a a backhanded kick in the shin
Yeah.
To the Ethereum ETFs, because there's not going to be any volume. Any volume that comes from that is going to probably be selling from Grayscale. So
Yep.
right off the bat, you're going to get outflows instead of inflows, because there's not going to be anybody. There's not going to be anybody at the steering wheel, shoveling assets into an Ethereum ETF on 4th of July. This is not going to happen.
Exactly.
So I hadn't thought of that actually until you just mentioned it. So, if they do July 2nd, that's, I don't know.
It just seems so odd, right?
It's just, like I said, it seems like a backhanded, like I said, kick in the shins, right?
Yeah,
Like
here you go, but not really. Here you go.
Yeah, here you go. Take your stupid Ethereum ETF. Do what you want with it, but it's gonna be approved for trade. It's be the equivalent of approving it for trading on like Friday at 3:00.
Exactly.
And so July 4th week, and again, a reminder: July 4th is not on a Friday or a Monday. It's in the middle of a week.
It's a Thursday, man.
So people peace out. There's the amount of work that's not going to get done in the United States next week.
The entire week, right?
Epic. Yeah. So, let's make the SEC, lawyers and scribes, have to do their job the whole week. Let's make, all of the issuers and their lawyers and their scribes have to work all week. It's just, like I said, now that I put it into context in my own head, it absolutely is a kick in the shins. Interesting.
Yeah. So I don't know, man. I think the timing is really weird on that.
It is.
But there's no guarantees it'll be next week. But it seems like that's potentially where they may be pushing it. Gensler just the other day at that, what was he doing? The
Bloomberg deal.
Yeah, and he said, "Oh yeah, the Ethereum." He sounded like this is all so great. Ethereum's moving just great right now, and like, what, really?
Yeah.
So again, us coming in here right now, people that are new this year to Bitcoin, coming into it, cryptocurrency, maybe even in general, I don't think they really are going to recognize just how crazy this year has actually been. Compared to where we've been and how we've got through it and everything that's just kind of coming up on it right here. But so that being said, man, let me ask you, when it comes to miners, you got any favorite miners, man?
I don't actually. I don't. I think those should be chosen as an asset class, right, or as a category. In the same way that, like I said, there's going to be consolidation. So, for example, if Marathon goes to buy somebody, right, both of those entities win. So if you own 6 miners and 2 out of those 6 get acquired, we're going to get a bump in the share price of the acquired organization. And then in the moment, right? So there's an acquired, an acquisition that's announced. And generally speaking, the price of that asset bumps up to the acquiring price, right, from where it's at currently, inside of the day that it's announced. And then over time, because of cost savings and whatnot, you get an increase in the price of the acquirer. So I like them as an asset class. And as a category, just I don't have a particular miner that I think is better than the others. I think you own 4 to 6 of them, and over the course of the next 4 years, you're probably going to have a positive result.
So got a question here. Since you said that, the question is, if not a favorite miner, Andrew, do you have a favorite? Do you have favorite aspects that you're looking at when analyzing miners?
Yeah, I want to find miners in their executive leadership that are really pushing the edges of innovation, whether it's AI, whether it's uses of energy that can be monetized, that aren't associated with just the creation of Bitcoin. I want to see who's leading in those particular spaces, and then who's in the best capital position. So there has to be a couple, 2 or 3 that stick out and are nose to nose in that particular race. And so, for me, the idea is to take a look at, forward thinking, innovative processes and thoughts. Are the CEOs or executive team, what are they saying when they make public appearances? As an example, Arch Public and myself and Tillman and our team are going to be at the Bitcoin conference in July 25th.
By the way, guys, if you're going to be there, make sure you stop by and say hi to these guys.
Yeah,
okay.
Yeah. So we're a sponsor at the Bitcoin conference too. So, some visibility there. It is, so it'll be interesting to listen to mining executive teams who are going to be there, who are going to be on panels. We're going to have things to say. It's going to be interesting to see if there's someone or some firm that sticks out versus the others with their commentary, because you get an industry that shows up to a place like that. 9 times out of 10, most of what they say is going to sound the same, right? Because they don't necessarily want to make headlines, because if you make headlines, you have a tendency to make negative headlines. That's not good. But is there somebody that sticks out, and why? And is it talk about innovation? And so, can you bring together commentary about innovation with actually real world results that speak to that innovation? In other words, what do their financials look like? So that's the way that I look at it. That's the way that I evaluate any quote unquote sector, is where's the innovation coming from? And
and that makes, and anybody that's been watching us here, this is our fifth episode of Beards and Bitcoin, and anybody that's been watching, I think you probably noticed that is a constant theme, right? When we talk about Bitcoin, when we talk about Bitcoin miners, whatever we're talking about, it's never really about that thing. It's about, what does that thing mean? What does it lead to? What are the possibilities?
Oh, hey, here's the deal. Right behind my beautiful bald head is innovation as a clear example. Right over, where am I at here?
The other side.
Right there is a deconstructed BlackBerry Bold, okay, from 2008, 2009. And then on the other side are two iPhones that are deconstructed, okay? That is a very clear example of the differences in innovation. BlackBerry dominated, absolutely dominated business handhelds for a period of 5 years.
Yeah.
If you were an executive at any Fortune 500 company or Fortune 1000 company or a startup and things were going well, it was a borderline status symbol to have a BlackBerry. Okay. And they absolutely were the stranglehold of the market. I should have a Nokia deconstruct up there too, because they were the retail.
You couldn't take it apart.
Yeah.
It's so strong. You'd throw it against the wall, it'd be fine.
Right. Exactly. But they didn't innovate in a meaningful way. They didn't keep up with the pace. And Apple came in, they innovated. And even I remember, I've only used Apple products for the last 15 years from a business standpoint. And I remember when the iPhone came out, I'm like, it doesn't have the keyboard. How am I going to use it? Just more of a toy. And then 18 months later, I never looked back. I only used iPhones. And that's a microcosm sort of, analogy. There's going to be that type of disruption that happens in every industry. And think about it this way. Bitcoin miners have effectively done the same thing for the same reasons and in the same cycle for more than a decade, right? That's exactly what they've done. Somebody somewhere is going to go from BlackBerry to iPhone in the mining space, and it's going to be innovation. I don't know who that is, and I don't know what it's going to look like. Is it going to be micro miners? And there's a deal with General Electric where they're, putting, some sort of chip into something. So all sorts of stuff is mining, and we don't even know about it. I don't know. That seems a little bit crazy, but stranger things have happened. Is it something else? Is it an enormously efficient technology that now adjusts, energy consumption in some way. Maybe, I don't know. But there's going to be something like this that turns into this in that industry. We just don't know when or what it'll look like.
Man, I love that analogy, man. A nice visual here to end the show. I think that's absolutely great. I hope everybody caught on to that. If not, after we're done, just go ahead and rewind and watch that again. Because
I understand if people are distracted by, the good looks here. I get it. If they don't hear or see, because, I understand. I really do. I do.
Oh, my gosh. Tillman's going to have a blast when he comes back next week. Oh, man. As always, man, such a great time with you guys. Even though Tillman's not here, he was here in our hearts.
Yeah.
Hopefully enjoyed his time with his family. Again, guys, like Andrew said, they're a sponsor over there, and they're going to be over there at the at Bitcoin Nashville over there. So if you're attending, make sure you stop them, man. They'll be the bald guys with beards. They might not be the only ones, but
yeah. There's a post on our company Twitter page, TriArch Public, at TriArch Public, and we put up a post where if you repost and follow us, we're giving away one industry pass to the Bitcoin conference in Nashville. And that industry pass is a borderline whale pass. It's a VIP pass. You get to be at all 3 days. You get access to things like free food and free access and special talks and all sorts of stuff, as opposed to just a regular pass where it's 2 days and there's, 900,000 people on those 2 days. And it's ridiculous. That first day, that industry day, it's much more muted. A lot of smart people there. There's about a third of the amount of people in all the venues. It's very comfortable. And you get real access to things. So industry pass is valuable, and we're giving one away on Monday, I believe it is, if you go and engage with that post.
So you heard that, guys. If you don't have a Twitter account or X account, get one. Go over, be the first follow you have. I'll be that first follow. Make sure you follow me afterward, and Andrew and Tillman, of course, our ats are under the video here. But what is it? At TriArch Public?
At TriArch Public, TryArchPublic.
And if you still have trouble remembering that, I reposted it for these guys yesterday, I believe. So jump on my timeline there, and then just follow it back to there to the company page there, and retweet from there, guys. You got a chance to get that. That's amazing, man. Industry pass, absolutely amazing. And that first day, with there being so many less people, you get more of a chance to actually talk and meet with people.
You're going to get access. There'll be like 50 people in a room, and there are going to be 4 CEOs of Bitcoin miners. So what we just talked about, you're going to be, 15 feet away from these guys. You're going to be able to ask them questions afterwards at the industry day. It's that type of environment, as opposed to you're sitting in the main convention room and there's 30,000 people there, and you can't hardly hear what people are saying, right? Yeah. So industry day is a really, really valuable day. And again, industry day is very different than it has been the last 3 years. We've been to the Bitcoin conferences those years as well, because Bitcoin has become an institutional level asset on Wall Street. So there will be a significantly larger presence associated with large global financial institutions at the conference this year. And by the way, politics, right? So really, it's going to be a great time. We're going to have a couple events for clients while we're there. Going to be fun. Excited about it.
Yeah, and other people that are going to be there, guys. In case you probably follow me for following me, Scott Melker is going to be there. Gary Cardone and his team are going to be there. So a lot of people that you watch on here and maybe you interact with through the lives and whatever, you'll get a chance to meet and say hi in person, and they're all very willing to say hi. So, man, make sure you're there. Make sure you can do that. Andrew, as always, man, really enjoyed it. Great time. Lots of great information. I guess, I'll say have a great week, because next week is just going to be probably a lot of nothing, man. A lot of nothing, right?
Yeah. Have a good one, man. Enjoy it as always. And everybody watching out there, have a great rest of the week.
All right. Y'all take care, and be sure to follow us. Like I said, underneath the video here, you can get the links to the ads. Okay. Y'all take care. And if I don't see you guys in the academy, those of you there, I will see you on Friday. I've got my market analysis show here at 11 a.m. Central Standard Time. Fibbo will be with me. He's finally back from vacation. Slacker. He was up there in Iceland or something for a few weeks, or Norway, or I don't remember, something like that. But anyway, y'all have a great day. Trade safe, and we will see y'all next time. All right. Take care, everybody.